Now, this is our first episode in our third season. That's right, season 3. And when our team started talking about what we wanted to do with this season, we thought about what to focus on. Today, we're going to delve into origin stories. We're going to turn the tables and talk a little bit about my origin story. And then later in the show, we're going to talk one-on-one with another venture capitalist, Erica Duignan Minahan with Rain Ventures. Now, normally I'm the one asking the questions, but today we're going to flip the script, and I've asked Victoria Burt, who heads up Wocstar Media. That's right, she's come on full-time to lead Wocstar Media. And she's going to turn the tables on me and ask me the questions.
Gayle, thank you so much. Thank you so much for asking me to join Wocstar Media and to join you on this mission, which very much aligns with my mission to help women grow, help people grow and see their dreams. But I want to talk about, first of all, I love a good podcast, so let's do this. I want to delve into your story because I've heard it over the years, and I'm always seeing people ask you about how you started Wocstar. But before that, what was I know the answer partially, but what was your inspiration for the career you chose, and tell the people about how you started in finance?
Yeah, I think it's two things. One, my mother was a big inspiration. She's like those women that you would have seen in the movie Hidden Figure that were working on the space shuttle. She was doing similar work on the F-15 fighter plane and the DC-10, kind of the grandmother of the planes that we're all flying today. And so I saw women in technology. I saw them in science, right? She was using the IBM mainframe and that same COBOL and Fortran software. And so to me, the idea of women in tech and in business wasn't foreign to me. It's what I woke up with and saw at the breakfast table and the dinner table. And then the other part of the inspiration was the movie Wall Street. Michael Douglas playing Gordon Gekko. And I just was like, I want that life.
So it was about making the deals and making the decisions and being sort of like a mover and a shaker and a changer?
Yeah, it was being a deal maker. It was that hustle. It was that confidence. It was that people like looking for you for your opinion and it being respected, and doing it in this like high pressure, high tense place of Wall Street and finance, and like seeing millions and billions moving.
And how long did you do that before you came to this place in your life where you started thinking about Wocstar?
So I was a mergers and acquisitions banker, so investment banker that bought and sold companies on behalf of clients. And I did that for, a number of years. In total, I was at JP Morgan 20 years. But I did that for a number of years. But I also had a couple other crazy kooky roles while I was there. I was an international lobbyist during the Bush administration for JP Morgan. And then I was a philanthropist. And so I worked in JP Morgan's Global Foundation. And the thing was, in all of these, I was seeing the movement of capital. So I saw it when I worked in technology in Silicon Valley right out of college. I saw it as the movement of capital with big companies and corporations right on Wall Street. And then I saw it from the policy side, as an international lobbyist. And then I saw it as a philanthropist, right? Sort of the social impact movement of capital. But in all of that, what I didn't see were people that looked like me, right? All of this money being allocated and flowing around the globe, and yet we weren't the decision makers, we weren't the beneficiaries of it. And so when I got cancer, I made a little pact with God and said, if I get off this operating table, I want to join the front lines of my sisters who are building companies. I was doing little things like writing little checks here and there to, support a friend or buying, some item that she was selling. I wouldn't really call myself an angel investor at that point. I was just, writing the odd check. But yeah, it was that moment of thinking I was going to die that I had to really think about what my purpose on life was. And I haven't looked back since then.
All right, I'm going to stop you there because I know you have another guest coming in, and we're going to take a short break.
Thank you for this.
This episode of VC's Off the Record is brought to you by Wocstar Ghetto Film School Entrepreneurial Academy.
We're thrilled to have Erica Duignan Minahan joining us today on VC's Off the Record. Hey, Erica. So let's go off the record.
It is always wonderful to spend time with you and just, to chat with a really good friend who's also made a huge impact in the venture world. So thank you for having me.
Yeah, absolutely. And I don't think a lot of people think about the collaboration that takes place in venture capital. I think they probably see a lot of the competitiveness of it. But I have to commend you. Like when I stepped into this, you really embraced me and were just welcoming. And so I don't think I've ever said that. So thank you for that.
Oh, thank you.
But I want people to know more about you. Like, what's your origin story? How did this come to be? There's so many things you're brilliant at, but like you have been selfless in putting it all out there for entrepreneurs and companies. Where did that come from?
Yeah, absolutely. So, I always say my villain origin story started as a fifth grade president of the Young Entrepreneurs Club, where I handmade and sold friendship bracelets for $1 each. And, as a fifth grader in, I guess it was the 80s, that was actually some pretty good coin. So,
Yeah. I
got
mean, you
really.
had hustle in fifth grade. I love it.
Yes, absolutely, and learned how to spell the word entrepreneur early, which I have to usually write on a daily basis, so it's nice that that's a little bit secondhand. But, I think even though my parents are not entrepreneurs, my mom's a physician, my father, at the time was a professional chef, I always just had a real interest in business and in the idea of entrepreneurship and, people starting companies. I would say that that definitely carried over through my time at university.
Mm.
And even though I started off pre med thinking I might follow in my mother's footsteps, I eventually ended up sort of switching over to studying business economics with a minor in accounting and pursuing, my passion of going into the world of finance. I graduated UCLA in 1998, came to New York to work on Wall Street, spent about the first 8 years of my career doing investment banking, working in many different areas of public markets. Started off doing sort of traditional corporate finance, so M&A, IPOs, debt transactions. Spent a couple of years working on sort of an asset management initiative that happened during the original dot-com boom, which was pretty
Ah.
interesting over at Credit Suisse. Did my MBA at Columbia Business School. Go Columbia, amazing school for those considering it.
We'll
Uh,
let that
yeah.
slide.
Studying finance. And then, back onto Wall Street as a fixed income trader, trading a lot of the really complicated mortgage backed securities product in sort of the mid 2000s, right before.
Before the crash, right?
Right before the big crash. So, as a sort of mortgage-backed security trader from 2004 to 2006, I really began to see, a lot of the uh, sort of manipulations of the market that were happening in some of the public markets, right? Whether, when I was on the equity side, sort of now being more in a mortgage-backed asset class. Every time I kind of got involved with a different area of the public markets, I would find that what I was specifically doing, maybe wasn't doing anything wrong, but when I kind of zoomed out and looked at the big picture, I would start to feel a little bit uncomfortable with the way money was moving in the market and my specific role in maybe creating, wealth transfer from what I would describe as more, the everyday people to a, very small hierarchy of folks. So, I was really felt faced with a little bit of a moral dilemma, which I think was exacerbated by the fact that by the time I was 2 years out of business school, I had just given birth to my youngest child. I'm a mom of three as well. And, when faced with returning from maternity leave, to go back to a, 70-hour-a-week job where, I was really not going to be able to spend as much time as I'd
Yeah.
like with my kids. I wanted to make sure that I was doing something that I really felt was contributing positively to society. So loved finance in theory, have always kind of been, what we call a quant jock, but was really
Yes.
trying to find my place within a sector where I could feel like I was using my skills for good and not sort of accidentally for evil. And around that time, I saw an opportunity at a brand new firm here in New York that was looking at creating basically an investor network, an investment platform that would invest only in female-founded businesses. Now, at the time, and I would say in 2006, this is like right around when, first round capital was just being started. Union Square Ventures, I think, was like barely a couple of years
Yeah.
old. So we didn't really have a robust venture ecosystem in New York.
That's right.
Uh,
And you definitely didn't have women like yourself in it. I
oh
mean,
yeah, absolutely.
it was a boys' network.
Yeah, it was very much a
Yeah,
boys'
for sure.
network. But, the first thing people said to me was, well, you can't do venture capital in New York. And I was like, well, I'm going to give it a shot. And then the second thing they said to me is that, well, you can't invest in female founded businesses because there are none. And I said, well, you may be right, but I'm sure if somebody was there to invest in female founded businesses, we might actually see some female founders. So, was really excited to get into a brand new space, immediately fell in love with the asset class, the organization where I started and, became executive director, ended up being Golden Seeds, which has been now one of, the largest
Yeah,
and most successful
absolutely.
gender lens investment platforms in the
I love it.
country.
I love it. So let me stop you there for a minute because now you've seen the investing from '06 to now. Have the things that you look for in companies changed? Maybe I should say, what are the things you look for, and has it changed in this, you know, period of time from '06 to now?
Yeah, I think things are always changing. And that's one of the wonderful things about, having a job in the capital markets is that it's always so completely dynamic. I think when I first started off, there was more of a focus on revenue, on earnings, on, efficient usage of cash flow, capital efficiency, really. And we saw, over the years maybe from 2006 to 2016, things really swing in a violently opposite direction, right? Where, earnings didn't really matter. It was all about growth. It was sort of all about, what I kind of call, this almost like Ponzi scheme of, the next sort of investor to hand your shares off to. So, it was very interesting to be in the market during a time where fundamental investment analysis just changed so dramatically. Um, I remember a few years ago, all of a sudden, looking at my husband and saying, oh my gosh, like, do you remember DCF analysis? And we both just like burst into tears laughing because, people, something that was like such a fundamental,
I was just teaching it the other
right.
day.
Something that was such a cornerstone of investment valuation, by sort of 2020 had been completely thrown out the window,
Now, listen, I teach a class, the Wocstar Academy, and I was teaching our students about DCF, discounted cash flow
Yeah.
valuation, the other day.
And just like, bell bottoms from the 70s, it's back now, right? People are actually looking like interest rates are non-zero. People actually care about these things. So it's, over the 18 years that I've been, in venture, it's been so interesting to see things, the pendulum really swing one way very hard and then now quite back to, sort of a more old school perspective.
Yeah, thank you for that. We have a lot of listeners that are raising capital and will probably love to talk to you. So I want to do a little bit of a speed round so they have a real sense of what you look for, what Rain is interested in. Tell me 2 or 3 things that you guys invest in. Is there sectors? Is there types of technology? Is there geographies?
Yeah. So, we are seed stage investors. So the most important thing is that the company needs to be seed stage, right? And then the second most important thing is that they need to have a very capital efficient business model. And for us, that means that, there's a clear path to getting to 50 million or more in revenue on, less than $50 million in total capital raised. And I would say, in this particular market, we'd probably love to see the company do it on, even less than $50 million.
Yeah.
But within that, we're sector agnostic. But I would say that in order to kind of fit the model of capital efficiency that we're looking for, 99 times out of 100, the company is going to need to be a technology company or technology enabled in some way. So our portfolio is split between about 50% consumer tech and 50% B2B enterprise software. We don't like to state too much around, what we're looking for specifically because we're not thesis-driven investors. In
Gotcha.
fact, I always say, if I've heard of what you're doing already, I probably don't want to invest in it, right? So it's very hard for me to say I want to invest in X because I actually want to be surprised.
I love that, actually. I love
right?
that. Yeah, I love that.
Like I want to invest in something I've never thought about or heard about where you have brought a really unique idea and perspective to the market to fill, a white space that is maybe not prevalently recognized.
I love that. All right, one word. What's your biggest pet peeve when it comes to founders?
Probably arrogance.
Okay, I'll take it. So let me ask you another question that we get a lot from the founders, and I think you could help answer. What's the biggest mistake founders make when pitching that they should try to avoid?
Yeah, I would say that the biggest mistake a founder can make is going into a pitch meeting not realizing that there's more value that can be extracted from the meeting than just getting a yes or no on an investment, right? It's an opportunity to build a relationship. It's an opportunity to get very valuable feedback. And even if, that specific pitch or investment opportunity isn't right for the investor that you're talking to, if you have a really good interaction and bring, good energy to the meeting, it's very likely that if you follow up with an ask for introductions to other people that might be interested in investing or can help you, that it'll be offered to you and can help you sort of continue to get closer to your goal. So I wouldn't think about it as, can this person write a check? Yes or no. If no, that's sort of the end of the road as far as my ability to get help or extract value from the interaction.
Yeah, that's great advice. I'm glad you shared that. The one I would add that I see often is that they don't really check in on the investor to find out like what they invest in or what they're interested in, right? They kind of just jump in like, here's my pitch, da 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 da. I always try to start with like getting them to talk a little bit, find out, what they're interested in, what they invested in most recently, because it sort of helps you figure out how to maybe pivot your conversation a little bit.
Yeah. And, I certainly have absolutely seen founders who do that. Me personally, I always feel like we only have 30 minutes and like, I don't want to be interrogated at the beginning, right? Like, let me first find out what you're doing, so that we can move forward.
Your cards close to the chest. Like, hey, I see you.
But yeah, that's a really good point. Every VC is different in terms of, and I think a good idea is to even start off the conversation asking, hey, would you like me to start with my presentation, or do you want to start by telling me a little bit about what your fund is interested in? And that way, the format will flow in a way that is probably most comfortable for the person you're pitching.
That's right. Now, do you guys see why I have Erica on here? She's just brilliant. That was brilliant. Thank you. And then, are you a texter or an emailer? What's the best way for people to find you? Text,
Definitely
email, LinkedIn.
Prefer email.
All righty. Erica, thank you for coming in, and thank you for. I've known you and loved you for years, but I learned so much about you today in a different way. This has been really beautiful, and very informative, which I love because our listeners are wanting real talk from real investors, and you are the real deal. So thank you.
Well, right back at you. And, thank you so much. And if anyone is interested in emailing me, It's Erica at rainvc.com. Would love to hear your pitches.
Awesome. Thank you.
Thanks for hanging with us. This podcast was produced by Wocstar Media in New York City at the Podstream Studios. Be sure to follow VC's Off the Record on Apple and Spotify. We're also on Sheconomy, the State of Women podcast platform. Please consider giving us a good review or share it with someone. Let us know what you want us to talk about on our socials and our YouTube channel. You can find us at wocstar.com for all the information.